So silver is definitely underperforming, hasn't broken this high. It's making a series of lower highs and lower lows. And so there's definitely a red flag here in the silver space. And a lot of damage has been done, and it seems to be struggling to get any traction. So definitely has me worried that it might not want to move back up and go to all-time highs. Now, if we take a look over at gold miners, this is at least a positive for the precious metals space. We are seeing gold miners, much like gold, pushing above this high from a few trading sessions ago. So it did find support here. It didn't make a lower low. We saw gold miners hold. Taking a look at the markets, we have equities trading slightly negative. The S&P 500 and the NASDAQ down. We've got the metals down a little bit, and we've got oil slightly positive. So overall, relatively flat day. I think the markets are still just trying to digest things. When we look at the short-term price action of the S&P 500, we went from panic selling and this waterfall type of oversold sell-off to the market having a sharp rebound and getting FOMO, everybody piling in, shorts covering. When we look at the daily chart, this entire dip right here was right here on the charts. We had these cycle lows. You can see down here, these cycle lows on the chart. And you can see we've had these cycle lows kind of repeatedly over this time. And this is why we usually tend to get these bounces, right? The market flushes things out. We hit a cycle low and we've got this reverse. So now the market, when we look at the S&P 500, is right up here into a resistance area. Each time it gets up here, it struggles. And now the big question is, can it extend? Can it push through and actually make a move to some all-time highs? Or is it going to continue to struggle? If we look over at the NASDAQ, not quite as strong as a chart. We've seen the market sell off. We still had the same panic selling and FOMO buying, but the short-term trend has turned red, telling us that we need to be aware that the S&P 500 is still bullish, but the NASDAQ has got a bearish bias to it. The daily chart is very clear that we are stuck kind of under resistance, right? This whole range right through here, there's gonna be a lot of volume through this area. So for it to try and push up through. So that's what we need to see if it is going to recover, or if this big breakdown here, I mean, it's done some damage and we just need to see if it can recover or not. If this starts to roll over and break down, I think we could see the very big sell-off in the equities market. It'll be interesting to see how the the Magnificent Seven will unfold. Again, they don't look very strong either. Let me get rid of some of these other charts here. Let's just focus on one big chart at a time. If we take a look, the Magnificent Seven definitely have this big support level through here. Lots of damage done. It's bounced nowhere near the highs, not even near the halfway point. So it is underperforming, and this is a heavyweight. If this underperforms or starts to break down, it is going to drag the indices, and we're going to see a very big unwinding event. I think very similar to what we saw back last year. Kind of at the same time, we saw a big sell-off happen in February, and it sold all the way back into April, and we have a very similar situation kind of starting to kind of brew here again. Now, let's take a look what else is kind of moving. Let's take a look over the bond market. We do have bonds up 0.5% this morning. They're trying to carve out what could be a little bit of a bottom here. In the big picture, though, it is still building a very gnarly, noisy, volatile base. After having the huge sell-off, after the COVID kind of peak back here, it's sold down.
The S&P 500 has rebounded sharply from oversold levels, but it now sits directly beneath a well-defined resistance zone. Each attempt to push higher has stalled in this area, raising doubts about the market's ability to reach new highs. The NASDAQ appears even weaker, showing signs of a short-term downtrend while remaining trapped under dense trading volume from previous months. Large-cap technology leaders, often referred to as the Magnificent Seven, are underperforming and remain far below their peaks. If these heavyweight stocks fail to recover, broader equity markets could face a deeper and more sustained sell-off.
So again, in no man's land, doing its thing. If we take a look over at, let's go take a look at a couple other things. Let's go take a look at take a look over at gold. If we take a look at gold in our charts here, you can see our strategy tells us when the markets are favorable for certain things. And you can see here we had a move in gold. We came up, we saw gold start to move higher. We eventually hit our 5,200 target. Now this is GLD, but it moves the exact same as gold. You can see there's a nice trend and a move all the way up into our target. Since then, the market started to go red out of favor, and that's when we want to be very cautious. That's usually when you get market corrections, choppiness. But what's interesting here is we actually have a green box here. We have a new momentum signal on gold. The last time we had one was right over here. After it had a sharp pullback in consolidation, it took another run higher. So these are just short-term signals. There was another one back over here before it ran up to hit some all-time highs. So there is some momentum starting to build in gold. The fact that it broke this high over here is very good. Let's go back to the gold chart and look at the daily chart of actual futures and zoom in. If we look at these chart patterns, I'll just kind of clear this up a little bit. We can take a look at where gold could go. So it's obviously a lot of damage has been done here. But if we take a look at this low and this, let me grab the proper tool. I have it. Here we go. To the high and down to this low. This tells us where gold could run to next. And so if we take a look at this and stretch that forward, the 618, it is hitting the 618 right now. And the next move is potentially at the 53.58. So 5,300 and about $60, which will bring us up pretty much to previous highs. And that will be where the 100% measured move is and could put in a double top. Because this pullback was so sharp, it pulled back so far that the 618 really only does it. The 618 generally in a strong trend should be above this previous high, and the 100% measured move should be way higher. But enough damage was done here that the 618 is almost like a 50% retracement. And now we're, 100% move doesn't even get us to the high. So that is definitely a big warning sign that I think gold and silver are on borrowed time. Really, it's a drift up into resistance, potentially into a top we need to be aware of, and it could go off a cliff and sell off even more.
The bond market is attempting to stabilize after years of volatility following the post-pandemic sell-off. Prices have bounced, but the structure remains choppy and directionless, suggesting investors are still unsure about inflation, growth, and interest rate policy. Rather than committing fully to bonds or equities, capital appears to be rotating defensively. This type of behavior often precedes larger market moves. When bonds, stocks, and currencies all struggle for direction simultaneously, it typically reflects a macro environment dominated by uncertainty rather than confidence.
So anyways, that's what we're kind of keeping our eyes peeled for and trying to kind of weigh out here and let unfold. If we look at silver, silver doesn't have a higher high or a higher low here for us to draw an upside target at this point. What we would need is for silver to push up and then have some pullback and then start to move higher. If it was to do that, then we can take the low, we can take the high, we can take this low, and it would give us some upside targets. But we don't have any of that with silver. In fact, we've kind of got the opposite. We've got, best case scenario, we got like a move down and then a recoil up, and that points to $55, right? But the bigger picture for silver is because it's really struggling. It needs to carve a bottom out and make an upward trend for us to predict where it could go forward. At this point, silver's got a very high momentum move to the downside, which is pretty scary. That brings us down to $41 per ounce if this was to unfold. And so silver is definitely underperforming, hasn't broken this high. It's making a series of lower highs and lower lows. And so there's definitely a red flag here in the silver space. And a lot of damage has been done, and it seems to be struggling to get any traction. So definitely has me worried that it might not want to move back up and go to all-time highs. Now, if we take a look over at gold miners, this is at least a positive for the precious metals space. We are seeing gold miners, much like gold, pushing above this high from a few trading sessions ago. So it did find support here. It didn't make a lower low. We saw gold miners hold at support, hold above support, and now they're popping and outperforming to the upside. So that is a really good sign. Let's take a look over at silver miners SIL. It has done the same thing. Let's take a look at the juniors for silver just because they're usually more volatile. So it did poke to a lower low, and it hasn't quite recovered back up to a higher high here. So silver miners, the small caps aren't quite recovering there just yet, but overall, the miners are showing signs of life, and hopefully we're going to see a pop in expansion either today or tomorrow and start to see a drift up. And hopefully we see some big volume. We see buying volume step in. The volume on these two up days are light, and all the red bars have been higher volume, so we're definitely still in a distribution phase where most people are selling miners versus accumulating. And low volume just means the sellers kind of are slowing down. They don't want to drive the market down. They're kind of stopping their selling. They're letting light volume and optimistic people kind of buy back in and let it drift and try and push it back up. When big volume steps back in, at this point, it's most likely going to be selling volume, and it'll drive it back down. And so that's what happens when the big institutions and big players get in. Once they hit a level they want, they start hammering and unloading shares as quickly as they can. And when they've done enough damage and they're creating too much fear, they let off, they stop, and they'll let price drift and work itself back up. And then they can hammer it again and unload more of their portfolio. It's a fairly small market, small space. It's easy for them to drive the markets up and down. And so they don't want to just keep selling off. They'll do it in tranches, in waves. It usually takes them days, weeks, or months, depending on how big positions are with some of these big funds and these big money managers who are rotating in and out of sectors.
Gold has recently shown renewed short-term momentum, breaking above prior swing highs and generating fresh technical signals. Historically, similar setups have preceded additional upside. However, the broader picture is less reassuring. The recent correction was deep and damaging, limiting how far a rebound can realistically extend before encountering major resistance. Fibonacci projections suggest gold may struggle to exceed previous highs, raising the risk of a double-top formation. This places precious metals in a vulnerable position, where prices may drift higher temporarily but remain exposed to sharp pullbacks if sentiment shifts.
Let's take a look at platinum really quick. Platinum, very similar to silver, lower low, lower high, really struggling to get some traction. Palladium down again today, very similar to silver. Again, not looking the greatest. Bitcoin down 2.6%. It had an oversold bounce. And again, when we zoom out, look at it from yesterday's price action, our analysis here, it's hit the 618. It's having a hiccup, a pause. It could very easily drop to 51 very quickly, which I think will catch a lot of people off guard. I know a lot of people were expecting all-time highs after this. We were talking about how 50,000 was that downside target, and how the market's going to probably want to pierce this pivot low over here, probably pierce 49,000, which will trigger stops, which will do all kinds of stuff. This was a very significant washout low in the market. You can also tell because of the massive volume. And after it had that washout low, it ripped higher and hit all-time highs. So these significant turning points are probably going to want to be triggered again. And that means, there's a long way down for gold to still come down here, flush down, pierce that level. At which point, if it was to do that, it'll probably bounce up and build some multi-week or multi-month flag. And the big question is what happens after that, right? Does it keep going down? Or is it going to find more of a base? Obviously, if all this happens and we enter a bear market for equities, the economy gets weak, then we're going way back down, I think, to much lower Bitcoin pricing. Let's take a look over at oil real quick, up 0.33%. Oil is starting to build what looks to be kind of a bullish chart pattern here. It's a series of higher highs and higher lows, a series of bull flag patterns, and this most recent one right here is, looking pretty like a bull flag pattern as well. It could push and pop higher up in 68, maybe even 70. If we use a Fibonacci extension, we can get an idea of where oil could go just based on this chart pattern right here. We could see it moving up to $68, $69 per barrel potentially, which could happen based on this last move. It could literally happen in 3 or 4 trading sessions if it really wanted to pop. So there's some upside potential for energy. We are seeing energy stocks do very well when we go and look at the hot list OIH, which we traded with the band strategy and locked in some nice gains. It continues to just muscle its way higher and is pushing up to highs. If we take a look at XLE, which is another sector ETF, again, doing the same thing. So energy's really come to life and is taking the lead here. Definitely kind of bucking the trend from technology, pretty much opposite of technology and AI.
Silver continues to underperform gold, failing to establish higher highs or a stable base. The trend remains downward, with momentum favoring further weakness unless a clear reversal develops. Mining stocks offer a mixed signal. Gold miners have held support and begun to outperform slightly, suggesting selective optimism. Silver miners, particularly smaller companies, remain fragile. Meanwhile, industrial metals like platinum, palladium, and copper show signs of exhaustion after extreme volatility. Large price swings and heavy volume hint that a speculative peak may have already formed, increasing the likelihood of consolidation or decline.
A couple days ago, we talked about the software sector. It was just getting beaten up. It was in free fall, waterfall sell-off mode. The volume is massive. It went from nothing to huge volume and lots of selling in this space. The AI is definitely threatening the software space. There's lots of talk about it. Saw an oversold rebound in the last 2 trading sessions. When we zoom back on the chart, you can see it's a pretty critical level on this chart. We've got this, it's not quite down into the lower range yet. It is in the lower range, but you can see it's dipping down deep into this oversold level. Huge volume telling us that something is definitely changing. And if this was to, it's most likely going to find some support and bounce here, which it's starting. But if it starts to break down through this level, we could see a very big unwinding in this space. Whatever the height is of this box here, usually you can see that flip to the downside on a break of that cycle, which if we bring that down would bring us to the lower end of the range right down in here and probably pierce that. So we'll have to see how this unfolds. But overall, I think there's a lot of news, a lot of people just talking about it, a lot of fear-driven selling. And I think it's oversold. And who knows, we could see a miraculous comeback very quickly, but this is what happens when the news gets a hold of stuff. And of course, it's fearful. The software industry, tech stocks move very quickly, especially when it's threatened with AI. And so it's just created a huge bout of selling, which I think is overdone, a bit of an overreaction at this point. Last but not least, let's take a look at copper real quick. Copper futures. I'm not a big fan of copper. This chart pattern, we talked about these 3 surges to a high. Usually that signals we're very close to a big sell-off. Ended up having one more big push and surge higher, along with all the other metals. It just was a feeding frenzy, but we've seen a lot of damage. This looks quite a bit like a topping pattern. I'd be very leery. Pretty much this here was a sign that we're very close to a top. And then we've really, since then, we did hit all-time highs, but it's got lots of volatility, huge swings in price. Just the recent price action here was a 15% rally, and then we saw a 15% sell-off. And this looks like big volatility, big volume, high selling volume, and this is a topping pattern that I think will eventually resolve to the downside, I think, along with precious metals in general and all of that. So this market, the metals market, is exhausted. And I think the feeding frenzy is pretty much over, but I have some hope. And the long-term charts of metals are still holding up. A lot of damage was done short-term, but the long-term trend is still rising, the longer moving averages, and those are naturally going to support it until price trades sideways long enough that they start to flatline or roll over. So you got to stick with the underlying trends, let the underlying rising tide hopefully do the heavy lifting, support price. And then we just have to see if it's going to resolve to the upside or if it is actually going to start to break down and a time to step aside.
Energy markets stand out as a rare area of strength, with oil forming a bullish structure supported by rising highs and strong sector performance. In contrast, Bitcoin appears vulnerable after failing near key retracement levels, with downside targets still in play if selling resumes. Across markets, volatility and emotional trading dominate. Short-term damage is evident, yet longer-term trends in some assets remain intact. The coming weeks will be decisive, determining whether markets stabilize and rebuild, or whether this pause is merely the calm before another wave of selling.